Hello everyone, I am Dheeraj. Today I will discussing on the topic hire purchase accounting, record in the books of purchaser and vendor. Now the definition, a hire purchase agreement is a type of financing arrangement where the purchaser acquire an asset by making a series of periodic payments with ownership transferring upon the final payment. The some more about the hire purchase. When a person want to acquire an asset but is not sure to make payment within a stipulated period of time, he may pay in installment if the vendor agrees. This enables the purchaser to use the asset while paying for it in installment over an agreed period of time. This type of business deal is known as hire purchase transaction. The methods of recording the hire purchase. The first method is cash price method. Assets account is debited with the cash price included in each installment. Initial or down payment are fully adjusted toward cash price. The second method of recording is interest suspense method. The buyer debit the assets with total cash price at the time of signing the contract. Under this method, at the end of time of transfer of possession of asset and the total interest unaccrued is transferred to interest suspense account. Now we talk about default and repossession. The first is when the hire is not able to make the payment in the time, then default is committed by the buy and the end owner take back the possession of goods. The some two ways of possession. The first way is when seller take possession complete goods, the complete repossession, and the second is when the seller take possession of only part of total goods sold to the buyer or partial repossession. Now the complete repossession. The first is hire vendor debit goods repossessed account and credit hire purchase account with agreed value, and the second one is hire purchase close the hire vendor's account by transferring the balance of hire purchase asset account to hire vendor account. Now we about the partial repossession. The first is hire vendor debit goods reposed account debit account and credit hire purchase account and the credit hire purchase account with the agreed value. And the second is hire purchase debit the hire vendor account and assets account with the agreed value. The sum note of related this, if agreed value is less than the book value, the difference is charged to profit and loss account of hire purchaser. Now we know about the accounting treatment in the books of purchaser. The first one is recording the initial transactions. The purchaser record the asset acquired and corresponding liability for the total purchase prices. And the second one is accounting for periodic installment. The purchaser allocate each installment payment between the reduction of liability and the recognition of the finance charges. And third one is recognizing finance charges. The purchaser calculate and record the finance charges incurred for each installment period. And the fourth one is accounting early settlement. If the purchase settle the remaining liability before the end of the agreement, any unamortized finance charges recognized. And the sum entries record in the purchaser's account. The first is when the assets is purchased on the hire purchase system. The entry is asset account debit to the hire vendor account. Second is for cash down payment delivery, the hire vendor account debit to cash bank. For and the third is for interest due at the end of the year, interest account debit to hire vendor account. and fourth is for the payment of the first installment, hire vendor account debit to bank, and the fifth is for depreciation charge, depreciation account debit to asset account, and sixth for transfer of interest and depreciation to profit and loss account, profit and loss account debit to interest account and to depreciation account. And now we know about the accounting treatments in the books of vendor. Recording the initial sale. The vendor record the sale of asset and the corresponding receivable from the purchaser. And the second is handling early settlement. If the purchaser settle the remaining liability before the end of the agreement, the vendor recognize any unearned finance income. And the third is recognizing finance income. The vendor calculate and record the finance income earned over the life of the hire purchase agreement. And the fourth is reporting the requirement. The vendor must comply with relevant accounting standard and regulation in their financial reporting of the hire purchase transactions. Now these are the entries record in the books of vendor. The first is when goods are sold on the hire purchase, the entry is hire purchase account debit to hire sales account, and the hire sales account is ultimately closed by the transfer to trading account. And the second is for cash received on delivery, the entry is a cash bank account debit to hire purchaser's account. And third is for interest due on the installment at the end of the year, the hire purchaser's account debit to interest account. The sum notes about these entries, the interest in the last installment will be difference between the installment payable and amount remaining unpaid by way of principal. Thank you.